Hi viewers, in this video we are presenting types of provisions. Provision for discount on debtors. Whenever debtors make immediate payment or payment at an early date, we allow them cash discount at certain rate on debtors is created by having provision for discount on debtors account. As the provision for discount on debtors relates to current year debtors, so it is should be charged or out of current year's profit and loss account. The provision for discount on debtors will be deducted from sundry debtors at the asset side of the balance sheet. The amount of the provision for discount on debtors is calculated on debtors. If further bad debts and provision for doubtful debts are also to be created, this provision will be calculated after deducting both further bad debts from debtors. This amount is to be debited to profit and loss account. The necessary entry is as follows: profit and loss account debtor to provision for discount on debtors account, being provision amount account debited to profit and loss account. The amount will be debited to profit and loss account and be shown in the balance sheet as a deduction from sundry debtors, balance remaining after the deduction of provision for bad debts. And next one is provision for discount on creditors. When timely payments are made by the trader to his creditors, he is likely to receive some discount which will be a gain to him. This amount will be credited to profit and loss account. This type of gain amount will be taken into account by creating a provision for discount on creditors. The entries are: when a provision for discount on creditors is created, provision for discount on creditors account debtor to profit and loss account, being the creditors of provision for discount on creditors. When the creditors allows cash discount to traders, creditors account to debtor to cash account to discount account, being the payment of cash and discount received. As a provision for discount on creditors account exists, the discount received in transfer, discount received account debtor to provision for discount on creditors account, being the transfer of discount received to provision account. For transfer of amount from provision account, provision for discount on creditors account debtor to profit and loss account, being the transfer of amount from provision account. And next one is provision for taxation. According to the Income Tax Act 1961, every trader has to pay income tax on his profits. This tax to be paid to the government on the profit of the current year. It seems necessary that contains specific amount for this known liability must be set aside out of the profit and loss account of the current year to make the payment of the taxes. The amount set aside for this purpose will be debited to profit and loss account. The entries are: first one is profit and loss account debtor to provision for income tax account, being the creation of provision for income tax account. The credit balance of provision for income tax account to be shown in the balance sheet from liability side, but the amount of actual payment of income tax will be deducted to this account. Entry is second one, provision for taxation account debtor to income tax account. Third one is income tax account debtor to bank account. being the payment of income tax for provisions year. And one more is provision for repairs and renewals. In factories where the machinery is being used for longer the period, gradually the amount spent on repairs increases. Generally, in the earlier years of the life of the machinery, the repairs charges are lower than the spent of later years. In firms, the service rendered by the machinery is uniform throughout its lifetime, but the amount spent on repairs and renewals are not uniform or varies from year to year. Because of this amount, the amount charged to profit and loss account will vary from year to year. In order to provide a uniform charge to profit and loss account, many concerns create a provision for repairs and renewals account. The object of creating the reserve repairs and renewals is to equalize the charge on profit and loss account in respect of repairs and renewals. The procedure for equalizing the charge is as follows. The total amount of repairs and renewals likely to be sent during the life of the time of the asset is estimated and then divided by the estimated life of the asset to find out the amount to be charged to the profit and loss account every year. The actual amount spent on repairs is debited to the provision account and not the profit and loss account. The balance of provision account will reveal the net amount which will be set aside for depreciation and should therefore be equal to the difference of its cost price and its scrap value. Of course, the asset will become useless in the meantime at the end of the working life of the asset. The provision account is closed by transferring the same to asset account. The entries are: first one is to provide provision for repairs and renewals. Profit and loss account debited to reserve and renewals account, being the provision for repairs and renewals provided. Second one is when repairs and renewals account is transferred at the end of the year. Provision for repairs and renewals account debited to repairs account, being the transfer of repairs account to the provision account. Third one is when the amount spent on repairs account debited to cash account, being the amount spent on repairs. So we are given two note points also. First one is the balance on the provision account would appear on the liability side of the balance sheet. Second one is depending on the procedure determined, the balance on the provision account can be either transferred to profit and loss account or allowed to continue. So all the journal entries are very important in the JO examination. All the best.